Hi, this is Dave, and welcome to the weekly market recap closing out the week for Friday, September the 20th, 2013. I'm recording this video on Sunday, the 22nd of September. So let's just take a look at a couple of charts this week, and I'm not going to go through all of the markets. I'm just going to go through a couple of key charts, and the intention of that. Let's look at the Dow futures on the daily chart. The intention of that is really to look at a couple of key things setting up. So let's look at some stock indices, and let's look at some key currencies to see what's going on here in the market. So the Fed came out this week and essentially said they were not going to, they were talking about tapering the economic stimulus, and they came out and said, well, we're not going to taper. So the result of that was we were in an overbought, let me change the color of this pen. We were in an overbought situation, and in last week's video we were talking about, you can't really expect a lot of upside here. We had a range of resistance that was about 200 and I believe it was about 240 points of resistance overhead, and we shouldn't really be looking for a lot of upside. That's not really the high probability thing to look for. We had the highs right up here around 15,522 or somewhere around there. And, on the Fed news, we pushed right through that. We went as high as, we went 140 points in a 1 minute bar on the Dow. So that, there was an immediate reaction. Off of that news, we broke through the highs and we closed above those highs. So that was bullish for the market. But I mean, if you really look at this, you're overextended, you're overbought, and you're breaking to new highs. And then, the next day, essentially the next day, what happened was, we printed even a higher level, and we closed off of the highs, into the bottom range, and then we sold off pretty hard on Friday. So I was looking for the breakout around 15. Let's see here. I'm not quite sure what these levels are, but I was looking at, let me just zoom into this chart. I was actually looking to take a day trade off of the retest of the breakout, which was right around, I guess it was 15,522. Let me just jump to the current contract just to make sure. So this is the actual tradable contract. So I was looking at 15,540 was the level that I had here to hold. And we got a small bounce off of that level, and then we just kind of puked all day long. We had a strong trending day to the downside on Friday. So, in the short term, I think we've hit, a short-term high. But having said that, the market looks really strong, but it is overbought at this point in time. So let's put this into perspective, jumping over to a weekly chart. Now, this is the same chart. This is a weekly chart of the Dow futures from a Darvas squeeze perspective. So those who know me know that this is a methodology I've been working on for quite a while. And we printed actually a Darvas squeeze breakout on the weekly chart. So that setup is essentially, we go into a low volatility period, and at the same time we're in a low volatility period, we break the high of, the weekly range. So this box, these are weekly bars, and this box denotes the weekly range. So we printed a long signal at 15,532, and we have the potential of a target all the way up around 16,400. That's another 1,000 points, roughly almost 1,000 points higher, 900 points higher. So I really pay attention to these signals because, this is more macro. This is more macro bias. And you can see here the last time we printed this signal going back, let's see, the last time we had a signal was January, the end of December, January of this year, January of 2013. And look at what happened. It printed a signal at 13,337. We went all the way up, and we hit the target of 14,510, and then we went even higher. So the other time this signal fired was back in August of 2012, right? And we printed a signal at 12,800 and something. I can't read that too well. And, what essentially we did was we pulled back several hundred points, and then we pushed higher for several weeks. We pulled back, and ultimately we came up, and we hit all of these targets. So when you look at this from a macro perspective, I think you have to keep an eye on the fact that we are in a massive uptrend, and even though you're going to have several 100-point pullbacks, you have to look at where those pullbacks might find support and push higher. So for example, when this signal fired, I think we pulled back 300 or 400, almost 500 points right after the signal fired, right in this area here. And then when it ended up happening was we pulled back for 2 weeks, and then we ultimately pushed higher several hundred points. So I think we have to be really cognizant of the fact that when these signals fire, this is something that I've learned over time. When these macro signals fire, you can get several weeks of weakness, but essentially you have to look at if the larger term trend is going to stay intact. So I hope that makes sense. That's what I'm looking at for the Dow. I wouldn't be surprised to see this being a short-term high put in place, and then looking to see where we're going to pull back to. We're overbought, looking to maybe reset the chart, reset the momentum indicators, and then looking for an area potentially to get long. Going forward. Now this pullback, we could see a several 100-point pullback, or we could find support and push off. So this is kind of, you got to go on a day-by-day basis and assess this, or a week-by-week basis and assess it. But essentially, I'm not interested in getting long up here, but I still do have a macro long side bias. So I'm looking to see, how far we might pull back. So having said that, there's really nothing to do this week. Going into next week, I'll be looking at day trading opportunities on the stock indices, and that's it. So the S&P futures, same story. Okay, same story. We hit new highs, and then we pulled back, and looks like we're holding close to the breakout point. So let me jump over to the S&P and see if we printed a target. So we didn't actually print a signal here, although we did break a weekly Darvis box, and then we came right off the highs. That's short-term negative, long-term positive, short-term negative. So the Nasdaq did. We have no signals on the Nasdaq. So let's actually jump over to the Nasdaq on the traditional charts. The Nasdaq has been pushing to all-time highs, and let me just zoom in on the Nasdaq. One of the things I was looking at last week was, is the Nasdaq, just waiting for the other indices to hit resistance and going to sell off, or is it giving us, a heads up that the market is wanting to go higher? So essentially what I did was I looked at this range, and I projected the height of this range off of the breakout point, and we've hit that target right in here around 3,233-ish. So, this range projected higher brought us right into that level. So in terms of targets or where I'm expecting the market to go, that's already played out. And, we're really just overdone on this market. It looks higher. I think the same analysis holds as the sister markets. And let's take a look at the Dow transports. And that is the wrong symbol rather. So the transports are essentially confirming, the breakout in the Dow, where they're pushing to all-time new highs as well. But they're, same analysis, they're overdone. So Dow transports from a Dow theory perspective are, respecting the move in the Dow. We didn't get as much of a pullback as we did in the Dow. So basically the bottom line for the stock indices are that I think we've hit a short-term high. But having said that, I think we're macro long bias, and we really need to look at, long-term, or if you said, longer short going, forward, I think what I'm going to be looking for is a seasonal bias to look for some sort of bottoming in October, and to be looking for ultimately a pushback to the highs, and to be trading above the highs, into probably the end of October. Now that's really far out. That's really macro. I don't usually look a month out. or more. But having said that, I think that, when I see those large weekly signals playing out, I'm looking for, a short-term high. I'm looking for it to pull back and look to see where we can get on board, maybe a longer-term trend back up to the high side. So as soon as we, have a deep enough pullback and it looks like we're ready to move higher again, I'm going to be looking at areas maybe where I can get swing long for some time. Now, having said that, I'm putting into perspective, I'm talking about, we could pull back up to 500 points in the Dow. So this is more macro, okay? So in the short term, happy to take shorts if, if the market looks like it's going lower, but the long-term trend to me is higher. So I think I beat that one to death. Let's take a look at the dollar index. So all of this quantitative easing and all of this Fed stimulus, essentially, the dollar index took the brunt of that. And what I mean by that is, we've been trading in a long-term range. Okay, with the lows, we broke those long-term lows on a decisive, 1-day bar. That's going back 3 days. So that would have been on Thursday, I guess, when the Fed announcement was. And essentially, Wednesday, because that would have been Thursday, Friday. So on Wednesday, and essentially, we bottomed in momentum, but we broke long-term support in the dollar index. So this long-term range that we've been talking about, what this means to me is that the dollar index essentially took the brunt of this lack of tapering. So all of this continued stimulus to me means that the dollar index is basically selling off as a result of that, and the inflationary sort of effect that cheap money has is going to continue. So I hope that makes sense. Going to keep an eye on the dollar index and see if, the dollar index is going to get crushed as a result of this. This was a long-term range that we broke out of. It's a multi-month range, multi-month range that, that we haven't broken or traded outside of in a long time. So to me, it's important to watch the dollar index. It basically got its butt kicked as a result of, of this Fed policy, and we'll need to see, is it really, is this going to be, I don't want to say the death of the U.S. dollar, but, is it going to, take a real drubbing or a real beating because of this policy? So the euro looks strong as a result, and, we're pushing to new highs. We have a lower high in place. We'll be looking to see if we're going to come up and test the top of this range at around 137. I think I wouldn't hazard a guess. That's about 200 pips or 200 ticks in the futures market higher. I don't think I would hazard a guess on where we might go. We'll have to reassess at the close of next week. So I'm just going to flip through. That's essentially what I had this week. The theme is essentially that, with QE, Infinity, and with the Fed announcement and the Fed policy, we broke to new highs. I think we're still macro higher, but, having said that, we need to look at, we don't have any seasonal tendencies at this time of the year, except for, sort of up and down volatility with no directional bias. I think the stock indices, I'm looking to see if they're going to get something going, maybe for some sort of a bottom or firm support into October when seasonally, the market gets going, at least the stock indices. I do have a directional bias higher. Having said that, we could pull back several hundred points before that ultimately plays out. So I think you really need to play this on a day-by-day and a week-by-week basis. But I think the key takeaway points from this are stock market does look higher, potential pullback. Dollar index looks like it took the beating as a result of the Fed policy. So it looks like, stock market essentially eventually higher, dollar index potentially eventually lower, and euro potentially higher. So having said that, there's not a lot of trading opportunities around this at this point in time. I don't see any really good trends to get on to really ride or to really position. So, I'm just really essentially just, trading really light right now. I've actually, this has been a frustrating last couple of weeks for me personally. I'm not losing money, but I'm not really getting ahead. So there just hasn't been a heck of a lot of trading opportunities, and I'm hoping that things are going to pick up in October into the end of September, but probably more so into October. So I'm just trying to, not make any stupid mistakes out of boredom and just keeping my powder dry and looking for essentially, setups and opportunities going into October. Hope that makes sense. I'm just going to flip through a couple of the other charts. Essentially, this video is done, but I'm just going to look at a couple of other instruments. Let's look at the just quickly USD CAD. USD CAD took a beating, pulled back down to this long-term trend line, looking to see if it's going to get above. I don't need all of these things here. Let me just delete some of this stuff. Looking to see if we're going to get back above, this trend line, or if we're going to hold this support. But hopefully, I'm hoping we're going to hold $1.02, push back up to the high side. Momentum looks overdone, and we've got sort of a divergence where momentum is putting in a higher high, price put in a lower low. So I'm looking to see if maybe this is going to be support in the bottom, and maybe we can hold 102 and push back up to the high side. If you can hear some yelling in the background, that is my almost 11-month-old daughter Zoe making some noise. So we're just going to hang out today for a little bit once I wrap up this video. So let me wrap up this video. Let me just go through a couple other things quickly. Here's the crude oil. Crude oil is just trading back into this range. In this triangle, looking to see if it's going to hold the support. I don't really have a lot on it. It's just really sideways, but I have more of a alongside bias on it, but it is really sideways, looking to see if it's going to build up some energy for a breakout of that triangle at some point. The 30-year bond. 30-year bond, off the Fed announcement, found some strength, but it's right back into resistance around $1, just below $1.32. So, we have the makings of a potential double bottom here, but momentum, has already shifted back up to the high side off of this low, and now it's overdone to the high side. So, looking to see if we're going to hold this resistance, push back down, maybe start trading in a range. Honestly, I don't really have a lot on it. There's nothing that looks really all that interesting. Let's look at gold. So gold, same story. This looks really messy. Pushed all the way down to, held above 1282. Pushed all the way, with, look at this bar. It's like over a 60-point bar off that Fed announcement, right into resistance, and then it sold back down, about 50% of that range. So I don't really have a lot on gold either. We're still in a seasonal, a period of seasonal strength for gold. I like this momentum shift. So it looks like we might, if we can hold some support down there, we might push back up to the high side and see if we can test 1380 again, as long as we hold these lows. But that's a pretty massive range. So not a lot on that either, except, I like that potential for a momentum shift off of the lows there, and holding above 1282. And silver, same sort of story there. A lot of volatility. Looks like we have a potential momentum shift back up to the high side. Look to see if we can hold some support there and push back up. Let's look at copper. So copper is diverging a little bit from gold. It looks stronger, but it looks like, from a momentum position, momentum perspective, it looks like, it's holding support at the MACD 0 line, and it looks like it's, approaching overbought. So not a lot on that either. So the theme is really not a lot on these markets, but, these policy changes are, potentially setting us up for something going forward. That's all I really have this week. I don't think it really makes sense to look at a lot of other charts, although we did cover most of them. So good trading, good investing. I hope it helps. This week on Thursday, we have the Fusion Analysis event in Toronto at the Weston Harbour Castle with the CSTA, joint CSTA and MTA. So have a look at the text that this video went out in for details on registration for that. It's only $50 for members, $75 for non-members. Look forward to seeing you out there. I think they have over 50 people registered. for the event, if I'm not mistaken. Probably, we'll probably get upwards of 100 people there. So reserve your seat now. I think, you'll learn a lot. It's a good opportunity to network with the Toronto community and some MTA members that are coming down from various locations in the United States. So I hope that helps. Be safe in the markets. Try not to do anything stupid. I'm gonna try to, not do anything too crazy and wait for, some better opportunities to come along and just try and be patient and disciplined. So, again, I hope that helps. Good trading, good investing, and we'll look forward to seeing you on Thursday, or look forward to seeing you at the next video update. All the best.